Our conditions mildly bullish, shifting back pretty aggressively yesterday on some of the Fed news, and that puts us back up into potentially pushing back up towards that bullish uptrend zone. We've got a bull market rank of 26.68, and that has been slowing and pausing a little bit during this counter trend and this retracement. But some good news. Market liked what happened yesterday from the Fed. We saw momentum shifting aggressively back towards the upside. Also saw breadth holding yesterday and getting a little bit stronger in that area, and also seeing sentiment get another bit of a pop back to the upside. We saw buy sell ratio continue to improve right here, sitting at 2.57. So a good solid. Solidly above that one number, giving us the bullish breadth right here. We're seeing sentiment have a really nice pop back up here, back to that 50 location. And let's take a look at some of the internal the market indices here. SPY solid move, 1.63% back into the momentum zone, still sitting right at that hold range, but some support now, that 547 location. And so now we'll see if the market can hold up at that area, and that's going to be the retest now, or the testing location is to hold up right here, see if we see additional demand start to come in at that price point. Also seeing strength here in Russell 2000. You can see it had a real big run and faded back towards the end of the day, but we'll see if that gives any additional follow through as well. We've seen technology finding some support right here at this 458 level on triple Qs, and potentially holding back up above this 382 area. Remember, this is a counter trend or a corrective zone. 50% is a very common retracement of a swing high and a swing low point. You get a move back halfway from that to high, and so we're seeing some support coming back into tech. We'd had a pretty aggressive sell-off, and this may be some early indication that some demand is coming back into tech. We saw really solid moves in bonds yesterday, short-term bonds, SHY, having a real big continuation move and shifting the trend actually on the 6-month time frame back to bullish. Notice that it's now connected here and here, where this was on this time frame connected to this swing high point. So that's dropped off, and now we're getting a new high on this time frame. So now we're in the momentum zone on short-term bonds. That's where we want to be, because now we've got rates on the other side of that moving lower with momentum as well. And so the Fed has anticipated that, or the market is anticipating what the Fed's going to be doing on their moves. We also saw a solid move on TLT, longer-term bonds, also breaking back, getting close to that 94, breaking up above that. This trend hasn't shifted quite yet, but certainly moving in the right direction now. If we can get up above this area and stay there, just got a lot of chop happening right here that could act as potential support for the market currently, as interest rates and inflation and bonds still are in play and still a big factor right now. We're seeing some strength in sectors overall. We had a bunch of them move back into that buy zone, less and less now into that hold. We've just got technology left that's lagging right here. Really, tech has been the only thing that's been lagging, at least as of the last couple of days now. We're seeing commodity had a big continuation on gold, GLD, and up 1.8%, back into the momentum zone, increased volume, solid confirmation bar here as well, where we open, we trade higher, we close, we just get that solid look versus something that opens and rallies and then comes back down and sells versus a topping type tail bar. And so this is a pretty solid looking move for gold. If you're looking to add into continuation on GLD, this is a nice setup for that, where you've got a defined location where you can add a stop loss at the low point under that 236, and you've got some increasing volume happening on there. Let's take a look at SLV, which is also finding some additional strength here. It had a nice pop, 2%. It had a deeper retracement back into that 50% zone as well, also finding some support. And then USO had a massive move yesterday, oil up 4%, putting us back up into this 382 zone, still in an uptrend based on the 6-month time frame, swing high, swing low point. And here's our momentum location. So we've got a solid retracement inside of that correction corrective box, that corrective zone, which is that 382,618 location. And that's often where you can get a continuation. If it's a deeper correction, sometimes that can really give some strength because there's fresh demand. You get rid of all of the supply. Anybody that's looking to sell has done so, and then you get new demand at these deeper locations. So keep an eye on USO, see if we get some follow through on that. Let's take a look at some muscle stocks in the group today. Top one on the line here is SNOO. It's got a lot of resistance right here at this $51 range and pretty choppy. If we go out to that 1 year time frame, though, it's a little cleaner looking pattern, and you can see that it actually has that nice consolidation pattern as it's got an uptrend. And keep an eye on SLNO. Let's jump over to also seeing MOD, which is in the auto space. Had a really sharp sell-off, turnaround, and rallied back up, probably on some earnings, not entirely sure, but increased volume, increased move, massive move, 20%. Still demand there for MOD. And then we're also seeing other names that are popping in here, like some pharmaceuticals, Tiva, Limbach Holding, which has been in there as well with MOD, and seeing a APLT a little bit lower in the trend, but potential for big moves on these medical and biotech names. APLT 1 to also keep an eye on for today. That'll do it for today's update. Everyone have a fantastic day today.